United States Internal Revenue Code, IRC. The Internal Revenue Code in the United States is like a big rule book that tells people how to pay their taxes. This includes money you earn from working, money made by businesses, money you inherit from family, and even tips you earn. The IRS, Internal Revenue Service, is like the teacher who makes sure everyone follows these rules. The rules are updated regularly to make sure they are fair and reflect changes in the economy or society. United Kingdom Finance Acts. Every year, the UK updates its tax rules through something called the Finance Acts. Think of it like a yearly update to the rules of a game, ensuring that everything remains relevant and up to date. These acts cover how much money you need to give to the government from your earnings, income tax, how much businesses need to pay, corporation tax, and other taxes like those on buying expensive items, capital gains tax. Click subscribe to this channel to get more topics you love. Germany, Einkommensteuergesetz, EStG. In Germany, there is a law called the Einkommensteuergesetz, or EStG, which talks about income tax. This is the money that people and companies give to the government from what they earn. The more money you make, the more you might have to pay. This law helps decide how much everyone has to pay based on their earnings, making sure it's fair for everyone, whether they make a little or a lot. Canada Income Tax Act. Canada's Income Tax Act is a set of rules telling people how much tax they need to pay on the money they earn. This includes money from jobs, businesses, and other sources like investments. This law also explains how you can reduce the amount of tax you have to pay by using things like tax credits or deductions, which are like coupons that save you money on your taxes. Australia Income Tax Assessment Act 1936 and 1997. Australia uses two main laws to manage taxes on the money people and businesses earn. These are called the Income Tax Assessment Acts of 1936 and 1997. They lay out all the rules about how much tax you owe based on your income. They also include details on what kinds of earnings are taxable and what kinds you can get deductions for, which helps lower how much you have to pay. India Income Tax Act 1961. India's Income Tax Act of 1961 explains how taxes work for everyone earning money in India. This includes the money you earn from your job, any profits made from selling things, and other types of income like winning a lottery. The law also lists different ways people can reduce their taxes, such as investing in certain types of savings plans or spending money on education. France Code général des impôts. France has a big book of tax rules called the Code général des impôts. This book includes all sorts of taxes like the money you pay on your income, the taxes companies pay on their profits, and even a special tax when you buy things, called VAT. It's designed to make sure everyone pays a fair amount to help run the country, from roads and schools to healthcare. Japan National Tax Agency Regulations. Japan's tax system is managed by the National Tax Agency, and it includes rules on different kinds of taxes such as income tax, corporate tax, and sales tax, similar to VAT. This system makes sure that whether you are an individual earning money or a company making profits, part of that money helps fund public services like transportation and public safety. China Enterprise Income Tax Law. China's Enterprise Income Tax Law focuses on how businesses pay taxes. It sets different tax rates for different types of companies, including foreign companies operating in China. The idea is to make sure businesses contribute to the country's development while also encouraging businesses from around the world to invest and operate in China. Brazil Código Tributário Nacional National Tax Code. Brazil's National Tax Code is like a guidebook that explains all the taxes in the country. It covers taxes collected by the national government, like income tax, as well as taxes collected by state and local governments. This system tries to make sure that taxes are fair and that they support government services at all levels, from local communities to the entire country. Russia, Tax Code of the Russian Federation. Russia's tax code is a collection of all the tax laws in the country. It explains how much tax you need to pay on things like your income and the profits a business makes. It also talks about VAT, which is added to the price of goods and services. This code helps manage how money is collected to support government activities and services. Italy, il Testo Unico delle Imposte sui Redditi, TUIR. Italy's TUIR is a document that brings together all the rules about income taxes. Whether you're a person working a job or a company doing business, this document tells you how much of your income needs to be given to the government. It's designed to make sure that everyone pays their part based on how much they earn. South Africa, Income Tax Act 1962. In South Africa, the Income Tax Act of 1962 spells out how taxes on income are handled. This means if you earn money from a job, a business, or even from renting out a house, part of that money has to be paid as tax. The law helps decide how much tax everyone should pay, and it tries to make it fair based on how much you earn. It also includes ways to reduce your taxes through deductions or credits, like spending on education or saving for retirement. Netherlands, Belastingdienst regulations. The Netherlands has a set of rules managed by the Belastingdienst, which is the Dutch tax office. These rules cover how much tax you need to pay on things like your income, the profits made by businesses, and VAT on goods and services. The system is set up to make sure that the money collected helps fund public services like schools, healthcare, and transportation, which benefit everyone in the country. Spain, Ley del Impuesto sobre la Renta de las Personas Físicas, IRPF. Spain's IRPF is a law that talks about the income tax for individuals. It says that if you earn money, a part of it should be given to the government as tax. The amount you pay depends on how much you earn. The more you make, the higher the percentage you pay. This helps ensure that everyone contributes to public services according to their ability to pay. Mexico, Ley del Impuesto sobre la Renta, LISR. Mexico's LISR governs how income tax is collected. Whether you are an individual earning a salary or a business making profits, a portion of that income needs to be paid as tax. This law outlines how much tax should be paid and also includes ways to lower your taxes, such as deductions for educational expenses or healthcare costs. Sweden, Skatteverket regulations. In Sweden, the Skatteverket is the agency responsible for taxes. They manage rules about how much tax you need to pay on your income, whether you are an individual or a company. Sweden uses these taxes to fund a lot of public services like education, healthcare, and public transportation, which are known for being very high quality. Switzerland, Bundesgesetz über die direkte Bundessteuer, DBG. Switzerland's DBG is about the federal direct tax, which mainly applies to the income of individuals. This law says that part of the money you earn from your job or other sources should go to the government as tax. Switzerland is unique because it also has cantonal taxes, which are decided by each region, so the total tax you pay can vary depending on where you live in Switzerland. Turkey, Gelir Vergisi Kanunu, income tax law. Turkey's income tax law covers taxes on the money people earn from their jobs, businesses, or other sources like rent. The law determines how much tax you need to pay based on how much you earn. It aims to be fair by charging higher taxes on higher incomes, and it includes ways to reduce your taxes, like deductions for family members or education expenses. Singapore Income Tax Act. Singapore's Income Tax Act explains how taxes work on the money earned by individuals and companies. One special thing about Singapore is that it only taxes money earned within the country or received from certain foreign sources. This makes Singapore an attractive place for international business. The tax rates are relatively low, and there are various incentives to encourage investment and business growth.